Good morning, everybody. Welcome. Good morning. We'll get going in about 2 or 3 minutes. Drop a comment in the chat there if the sound is good. TGIF, everybody. Awesome. Thanks, George. Sounds good. It's like pre-market. We had a little pullback so far, so we'll go over that in our presentation. Kind of discuss areas below us. I already posted on X this morning. Game plan. So good morning. Kind of where we were looking below us, and then kind of where above we're looking. So we'll review all that content. So give everybody another minute or so to jump in. So. Good morning, Will. Thanks for joining us. Did we decide if PCE, sorry, is actually coming out of 10? I don't know. I haven't seen anything change on that. So if anybody knows, throw it in the chat. Obviously, we must have had some pre-market news. I haven't really seen anything. So we're bouncing right at transition area. So that's good. I already anticipated that. So wonderful. Yeah, me neither. I didn't hear anything either, Will. So who knows? Yep. Rainbow continues to move up. So we did see a little weakness in the afternoon yesterday, but we'll talk about that. So, all right, let's go ahead and get started. We're at 9:02. So thanks for joining us, everybody, on this Friday. This is Michael coming to you from Game Edge on Friday, December 5th. With our pre-market prep session. As always, here at Game Edge, we'll cover those three pillars: sentiment, structure, and trend. And then we'll cover individual equities at the end. Go ahead and throw those tickers in the voice chat. And I'll be hanging around for a few minutes. And then I will probably come back and go live a little bit after the open, kind of like I did yesterday, and just talk through some of the trades that we're seeing and see if I have any good risk reward trades I can take live for everybody. So we'll see kind of how that plays out this morning. Already seeing some volatility, obviously, this morning pick up. So, all right, let's jump right into it with a market trend model based on the tick index. If you've joined us for any amount of time, the bolded white line is our intraday instantaneous cumulative tick, or CT. Obviously, this is just indicating buying versus selling in the overall market from market participants. And you want to see that moving from lower left to upper right, indicating more buying in the overall market, which we have seen the past few days to past week. Yesterday into the afternoon, we did see a slight weakness as we started coming into these momentum moving averages that we place on this. We also have a time series. These momentum moving averages just basically give us an idea of overall trend, just like other moving averages. So we want to see the cumulative tick stay above those momentum moving averages and continue to the upside in a positive slope. Breadth indicator, really just new highs have just been screaming above new lows. So there's definitely accumulation going on within the overall market, as you can see across the board here. But the past 2 days, really, we've had significant linear up days in the new highs versus new lows. So market looking very strong in that aspect. Filtered cumulative tick plus 1,000, minus 1,000, larger block orders. These are obviously institutions or larger market participants. Slightly above zero yesterday into the 8,000 range, but not the linear up previous two instances we've seen where institutions were significantly putting money to work and risk. So heading into a Friday, it may be just a little bit flat. We'll see how that plays out. And then our colored ribbon, this is our longer look back period. Red above cyan gives you an indication that the bulls are in control and there's more buying versus selling in the overall market. So if you're a longer term swing to position trader, then you want to continue to put risk and risk into the market and at work. Obviously, also if you're using the MTM for shorter duration, you want to see this continue to the upside. So market trend model still looks strong. We're above the colored ribbon. A pullback or consolidation still seems to be what we're looking at within the overall market, unless we see a significant like breath thrust to the upside. So we'll continue to watch that day over day. All right, moving on the SPX. Options complex, largest most notional value. That's why we look at it. We separate the SPXA from the SPXP. SPXA obviously is longer expiries. These are monthlies, and this is institutional positioning. Call dominated, still above and below spot price. Transition area fairly wide, but you see the top of transition there at 68.35. 68.50 has been that area we'd like to see us stay above, even a pullback down to 6,800. You're within the overall transition, but still supportive. So everything's supported below. We'd like to see these in the money puts overhead removed and these replaced with out of the money calls for significant speculation to the upside, obviously into the December expiry and into year end. So we'll continue to watch that. The December expiry, these could be removed then, and we could see some out of the money speculation to the upside. But staying above 6,800, I think, is really that key level. And even if we drop down into transition area, you still see calls below us will continue to be supported by institutions. So, all right, move on the SPXP. Again, shorter duration expiry as denoted by our web app and the tiles turned on over here. But we have all the tiles turned on, so we're still call dominated. You see a little bit wider transition. You see 68.50. Key transition area. Obviously, if we're within the transition area, it could be choppy on the all expiries. And we see 6,800 below. It's just a significant amount of in the money calls and positive net delta, as well as net charm that's positive that will continue to be supportive as long as we're above that level. So for us to get extreme cautionary and turn a little bit more bearish, we'd have to get below 6,800 and stay below that level for a significant amount of time, which not really anticipating that at the moment. Red circle here is the out of the money charm of the out of the money calls. Those will continue to grow overhead as we continue on in time. So those will still be a headwind up towards 6,900. If we get above that, then basically it's free sailing above that towards 69.50. But this will continue to be a point of contention for bulls trying to get above, as we've seen really the past overall week. We've ran right into 68.50, 68.70, and really not even tested 6,900. So again, a headwind due to the charm, but we're still call dominated with speculation to the upside. All right, let's move on the SPXP GEX ratio. Again, this is like a put call ratio, but we add the time component, which is gamma. Still in a positive slope, continuing to move to the upside, even with the SPXP kind of stalling on the price action. So really nothing to take away from here. We're above that one level, so it's indicating the bulls and call speculators are still maintaining control, and we're just kind of chopping sideways with a slight positive upslope. So we give a edge to the bulls for continued price appreciation. All right, moving on to the delta balance. Kind of a mixed bag here. We talked about this yesterday. The green dotted line is your right-hand plane. That's your out of the money speculation above spot price. The red dotted line is the left-hand plane. That's your in the money calls and out of the money puts below you. And then the blue dotted line is the aggregate, the delta balance. So again, delta balance pegged at 1. Bulls are in control, out of the money speculation. You see the left-hand plane. We talked about significant in the money calls below us with a positive slope. Those will continue to be supportive. The only cautionary or chink in the armor, crack in the ice, however you want to say it, is the right-hand plane. We see a little bit of negative slope. Again, that's the out of the money call speculation, as I just talked about. A little bit degraded there. So again, price appreciation to the upside is probably going to be difficult. And then when this is met with that out of the money call charm, which is a headwind. So again, 68.50, 68.70, and then 6,900 would be those levels overhead, but may be difficult. And then further expiries on out in time. You see the left-hand plane drop a little bit, but recover. We're above 0, and the delta balance at 1. So again, bulls are in control, just not with a significant move or appreciation to the upside with a lot of out of the money call speculation. So we'll watch this day over day. Bulls are still in control. We're still in the buy the pullback mode within the money calls below us. The market trend model still positive and advantageous. As we've seen the past few days, buying the pullback has worked out fairly well. But we'll see how that plays out today also, and then into next week. Net stack command, this is the highest sensitivity levels for today. 68.80 overhead, those are out of the money calls. Again, those will be a headwind up towards 6,900 with the charm. You see this is almost 1.5 to 1 The right-hand plane is larger than the left-hand plane. So again, as we try to move up, it's going to be difficult. Below us continues to be supportive, 68.65, 68.50 area, net charm. Those are out of the money puts. Those will continue to be supportive. Gamma, those are obviously the highest sensitivity areas. If somehow we did get above 68.80, we do have fuel to the upside towards 6,900. And then the Vanna winning the battle on the out of the money calls for the bulls. So that's good. If we see volatility drop, out of the money calls come in, this will be a tailwind on the Vanna. So that could definitely push us to the upside. And then you see 68.50 below. If we get below 68.50 and stay below there, and we see the volatility spike as well as out of the money puts come in, then this could be a headwind for a possible move up or a tailwind to the downside around that 68.50 level. All right, let's move on to 0DTE. Posted that this morning, call dominated above and below spot price. Again, drunken sailor range here. We chopped within that area yesterday pretty significantly back and forth. So Mr. Drunken Sailor Range got his name yesterday and used it well. Transition areas today are Confluence, GEX, and DEX transition, 68.45, 68.50. We already tested those pre-market, so staying above those will be important. Implied open was 68.70, but it's dropped there. So trading plan for today within DS and transition area, extremely choppy again. Like we saw yesterday, above DS 65, we'd be looking for 68.80. And you'll notice on that net stack command, that's where those out of the money calls come in and the gamma. So important there, but we still have the charm headwind. So we'd have to get above 68.80. That's PGEX to have an opportunity to move up towards 6,900. But again, with our new web app and our new tool, this charm, these charm bars just really give you a nice visual of where your headwind is going to be and most likely where you're going to see some stalling. Even if we get above 68.80, you see a significant amount at 6,900. So not really anticipating we go above those two levels. So very important there. And then to the downside, I've put the secondary arrows in here today. If you're a 0DT trader, you can have a quick trade above transition back towards 70, below transition to the bottom of DS at 25. And then if you're below DS, you can keep runners for a move down towards 6,800. So that's really the takeaway for today. Again, if we're within transition in DS, I would anticipate this to be extremely choppy. So let's go ahead and look at the trading view chart, and then we'll go on. So we're bouncing at the transition level. If you go back and look yesterday, I posted the transition levels, and we just completely chopped around those yesterday all day. I have to go back and pull those up. But it was just a significant level to watch for your trades yesterday, and that may be the trading plan for today also, that we're just going to chop around the overall transition levels. If we get below transition, obviously I'd be looking for a move back down towards 68.25, and then above transition, we'd be looking for the top of DS at 68.70. Right now, unfortunately, we're just stuck in the middle. So there's really no good risk reward. I'd like to see an open and us consolidate at least around the transition level. And then we bring in our intraday vol command to see where market participants are positioning. Intraday volume command was excellent yesterday. Go back and check our X post. We had crossing chopstick patterns, which means it was most likely going to be a consolidation day and difficult to move up. And then we actually saw a significant put spike into the afternoon that dropped us down to the bottom rail of that volume command. And then we bounced right off of it, right back to transition area. So again, balanced at transition area, as we always say, above transition, a little bit more bullish, depending on what the intraday volume command is telling us. And below transition, a little bit more bearish and cautionary to the downside. And then obviously we'll be watching the market trend model, because that is the core essence of all of our trades. And that is the gatekeeper to our mechanical portfolios, which are still on. We'll actually be closing Tesla this morning for nice gains in our mechanical portfolio and our P-Trans to PGEX. And we still have our wheel strategy portfolio that continues to have entries also. But again, transition area, I can't really overstate this enough. Key area to watch for a bounce, and that's why we put these levels on here. We believe we're the only service that provides these transition levels, and just having an idea of where you're at within the overall structure and the sentiment of above or below these key levels, and then watching the strikes and understanding that today. So, all right, so let's go ahead and jump into some individual tickers. So GameEdge.us, go to the newsletter section, put your email in. You'll be delivered the Beyond the Bell newsletter. This is on the weekends. This goes over our thesis, our tools, our strategies, and how we basically navigate the SPX options market and option structure, as well as individual equities. And then, as always, check our free courses, GameEdge Fast Pass. This is our total education course for free. Sign up, go through it, and then come ask questions as I do live presentations, and join us on open mic session when we have that open to the community. So as always, that's it for this morning. Go ahead and throw tickers in. I see somebody asked a couple questions. Who else got swiped out little after 2 yesterday, but recovered the day green? Yeah, good question, Daniel. So yesterday's price action was, around that. Let me pull up the SPX. I'm in the SPX here. Yeah, but we were right around the transition level. We kept chopping. The key thing was the vol-M command was not showing upside speculation. We saw this move up here, but there really it was not met with out of the money call speculation at all. So we were looking for stock or SPX to most likely stall into that overhead area, and then we got a pull down. And actually, we saw once we got below transition, we had that swift move to the downside. So that's again why key transition area, and we actually saw put volume spike, and then we saw that move to the downside, and we recovered right at COTMP, which was pretty cool to watch. Also, again, that's where out of the money puts go in the money. Historically, we see some monetization, and we saw a bounce right off of it, right back to transition, and then again, it was difficult to get over the 68.50 level. And then right at the end of the day, obviously, we had the spike above the 68.50 level. So yeah, I mean, it was a choppy day as we were kind of anticipating with the drunken sailor range and our overall vol-M metrics and how we were looking at the day. But it's just amazing to continue to watch these levels play out over and over. It's just mechanical of how market participants and market makers have to hedge, and so it just continues to not amaze because we've been doing this for 3 to 4 years here at Gamma Edge. We continue to see those levels be important. So which stocks will moon today? Very funny, Taylor. Very funny. Yeah, good question. Taylor's posting in there. He's one of our founders, and he's usually on here in the morning. So, but anyway, at the monetizing and exiting puts allowed the swift bounce. Yeah, absolutely, Daniel. So we had a significant put volume come in. So if I'm opening puts, my book is getting more negative. Hey, Tom, good morning. My book's getting more negative. The dealer book's getting more positive. They have to sell the hedge, that mechanical opening of 0DTE puts. So that was what happens. And then when we reach a greed or fear place, whatever you want to call it, if I open that risk of those out of the money puts and I got the move in my direction, most likely I'm going to take profit because it was very close to the end of the day. I think it was around 3 o'clock. Was it 3 o'clock or 2 o'clock? Yeah, 2:20. So theta decay is significant there on 0DT. So obviously you got the move in the direction you wanted. You probably reached your profit target. You most likely closed some of those puts. It just happened to be at COTMP where those out of the money puts go in the money. And if you're a 20 delta out of the money put holder, which usually that people speculate with, 20 delta out of the money puts, it goes to a 50 delta. And that's historically where we try to look for that 50 delta line on our vol-M command also. And we'll see that monetization event occur. Again, it could not have happened. We could have just continued to see the out of the money put speculation ramp up. But we saw that monetization start, and then you just get that bounce as I'm closing those out of the money puts. My book is getting longer, dealer book's getting shorter, and they have to buy to hedge. They're buying those puts back as I close them. So that just causes a reflex bounce, and then we just bounce right back towards transition area. So again, what we call these dealer adjustment bars here at Game Edge. So basically, this is the dealers are hedging mechanically opening of puts or negative delta coming into the overall market, and they don't have any regard to price levels. Basically, they just have to hedge to get their book flat to zero with their risk profile. So those we call those dealer adjustment bars. And when we see those dealer adjustment bars, those are important for us to know that, hey, this is a significant move to the downside. There's a significant shift in sentiment occurring, and market participants are opening one way or the other. And this is usually puts to the downside. And then obviously you see what happened here. These are dealer adjustment bars back to the upside. So swift move, closing of those puts very quickly from 0DT traders. And then they just move back to the upside. So, yeah. So, all right. Let me know if anybody wants to go over any individual tickers. I got the web app up. I'd be happy to look for those. Good, Daniel. Hope that was a good explanation. So, yeah. Tom, no worries. It's recorded. You can review it on X after we get done here. So, And I'll probably jump back on maybe 9:45-ish and just go over a few things that we're seeing, depending on what the price action looks like. If we're just sideways, really no reason to jump back on and explain anything. But all right, thanks everybody. Make it a great Friday. As always, like and subscribe on X and YouTube. You'll be notified when we go live with intraday content as well as live content, and then anything we post. Tesla, yeah, we can look at Tesla. Tesla 500 is my upside target. Again, not financial advice, but so 450 is where we're at right now. That's peak X. Let me take away this expiry. Let me look at the next expiry. So the structure continues to advance on Tesla up towards 470. It's call dominated, and then it moves up to 500 towards the monthly expiry, and you see not a significant amount of charm overhead, but you see out of the money speculation to the upside. I'm not saying we're going to reach 500, but we're call dominated. Structure still continues to look great for a move to the upside. So if we can get above some of these intermediary levels, stay above transition here, 450, 250, I think 470, and then 500 looks like optimal targets to the upside. And any pullback should be met with supportive type action on Tesla, unless we have some news come out. But you see this overhead charm. This is really important for a move to the upside. So this is going to have to be met with significant amount of out of the money call speculation continuing, because this charm is going to, as long as we're under these levels, these will continue to be a headwind. So we'll continue. We'll watch that. So yeah, absolutely. All right, thanks everybody for joining us. Again, we'll see if we can do a midday update or market open update, and just look at the overall price action. But as always, have a great Friday, have a great weekend, and manage risk. And we'll see you later. Thanks.